Hi, this is Palmer coming to you from ForexSwingTrading.com, where our job is educating traders. Today we're going to be talking a little bit about seasonal analysis. So seasonal analysis, these are patterns that can repeat year after year, and they usually do so for fundamental reasons. For example, between 2000 and 2009, in January, the US dollar rose 7 out of 10 times. And this is because in December, foreign companies usually repatriate their funds back to their country of origin. And when it comes to January, they have a lot of cash on their books that they need to invest. A lot of this money in the past has ended up in U.S. markets because the United States has the most liquid financial markets in the world. At least it did. Of course, things are changing now in 2014. A lot of money is now ending up in Asia. Okay, so with stock markets, they generally tend to rise in December as mutual funds add stocks to their portfolio. Stocks that performed well throughout the year, they'll add them in December so that they can tell investors in their prospectus that they had these stocks in their portfolio, even if they didn't get the gains. Then with the yen, this usually rises in October as Japanese multinational corporations bring their funds back to Japan in order to balance their books because it's the middle of the fiscal year. The capital will often leave at the end of October, causing the yen to fall. Okay, so this is a chart of the Euro Australian dollar for March and April of 2014. If you look at the bottom blue line, this is the William True Seasonal Indicator from Larry Williams. Okay, as you can tell, it says that there was going to be a peak in March on the Euro Australian dollar, and they called the peak around the 7th of March. The actual peak was on the 12th, so it was a little bit early. But you can see the trend did indeed fall, and the price fell. And then there was a subsequent rise in April, and the price rose as well. Okay, so the beauty of this is that you'll have this information weeks and months ahead of time. Okay, so in addition to the Williams True Seasonal indicator, I also use a seasonal database. And whereas the true seasonal is good for telling the trend, the seasonal database is good for telling you what happens day to day in a Forex pair. So this is the pound yen for April of 2014. As you can see, I can see what it looks like each day, mostly bearish. I can tell the average pip movement, the number of years it's won, and the percent wins. I go for a minimum of 75%. Another great thing about this tool is it tells you when there is potentially bigger move. So you'll see the red and the yellow colored lights, and then there's also green lights, which there's not a green light right now, but there are green lights. And what these tell you, the yellow and green lights, they tell you that there is a potentially bigger move coming up. And of course, you know this information in advance. So as you can see, the pound yen did indeed fall through April 2014. It started on the 3rd and fell through the 15th, just like the database predicted. If you'd caught this move from top to bottom, it would have been about 400 pips. But more likely what you would have done is you would have just sold the rallies. Okay. Now, seasonal analysis, you couldn't trade it by itself, but it does give you a substantial edge. It tells you when the bigger moves are likely to happen. It tells you moves in advance, and it is a good supplement to technical indicators. Again, these allow you to predict your trades and plan them rather than just reacting to price. So if I know
the seasonal database is telling me that there is likely to be a top on the 3rd, that the 3rd of April is likely a bearish day. If the seasonal trend is down and my technical analysis is telling me markets are overbought, this helps me to take the trade with a lot more confidence. Then I add things like volume spread analysis and cycle analysis and time-based analysis, and this really gives me a complete picture of what the markets are likely to do. And again, bear in mind that these indicators are all uncorrelated, unlike price indicators, which are all correlated. Okay, so I hope you enjoyed this video. If you want to learn more, please come and visit us at ForexSwingTrading.com. Thanks a lot and happy trading. Bye-bye.